There's a hidden cost in every trade, one that doesn't show up in your P&L. It's the cost of emotion, the silent bleed that happens when your mind reacts faster than your logic. This is not a story about charts or strategies. It's a story about you, the part of you that lives between patience and panic, between certainty and chaos. In this episode, Case 11, we dive deep into the emotional mechanics behind one of the most misunderstood events in options trading, IV crush. But this isn't about volatility. It's about what happens inside your head when reality refuses to match your expectations. You'll meet a trader, Daniel, whose journey through an earnings trade reveals a truth most of us spend years avoiding, that the real battle in trading isn't fought on the screen, it's fought in the mind. So sit back, breathe, let the noise of the market fade for a moment, and listen not to me, but to the part of yourself that recognizes every thought, every fear, every impulse that moves before price ever does. Because once you understand that part, you stop trading to win and start trading to see. Welcome to Mind Over Markets. There's a certain silence that fills the room right after earnings are announced. It's not the sound of excitement nor fear. It's the kind of silence that sits in your stomach, the pause between what you expected and what reality just showed you. For most traders, that silence feels like confusion. For others, it feels like pain. And for one trader in particular, we'll call him Daniel, it became the turning point that forced him to see what trading is really about. Daniel had been watching this stock for weeks. He had mapped every level read, every headline memorized, every analyst prediction. He wasn't guessing. He was prepared. Earnings were coming up and everything pointed to a beat. The chart looked strong. Sentiment was positive, implied volatility was high. He could feel the energy building like a wave. He told himself this was his moment. He bought call options a little heavier than usual, just enough to make it matter. He went to bed that night imagining the next morning that rush of green, that feeling of being right. He knew IV was high, he knew there could be a crush, but logic didn't matter anymore. He wasn't trading probabilities. He was trading validation. The next morning, earnings beat expectations. The stock popped. But when Daniel opened his account, his calls were down. Not a little, a lot. The screen that should have been glowing with profit was bleeding red. His chest tightened. His mind froze. He scrolled through the data again. The price was up. His direction was correct, yet his P&L was drowning. It didn't make sense. He felt betrayed. Not by the market, but by reality itself. That was the day Daniel met IV crush, not as a concept, but as an emotion. Because in trading, we don't really experience concepts. We experience feelings, fear, euphoria, regret, confusion, all wrapped inside the numbers we think we understand. And for Daniel, the four crush was not just a volatility adjustment. It was the universe whispering, you can be right about direction and still be wrong about expectation. He stared at the chart in disbelief. His brain scrambled for meaning. The stock was green. He had predicted it perfectly. So why was he losing money? That's when the first psychological layer cracked open: overconfidence. Overconfidence doesn't start with arrogance. It begins with competence. You make a few good trades, you start seeing patterns, you start connecting dots that others don't. You feel smarter, sharper, closer to the truth than before. And slowly, quietly, that competence transforms into certainty. Certainty is seductive. It feels like power. But in markets, certainty is poison. Because the moment you know something will happen, you stop managing risk. You stop respecting randomness. You start believing you control the outcome. Daniel didn't realize it yet, but he wasn't betting on earnings. He was betting on himself, on his identity as the guy who gets it right. When the trade went wrong, it wasn't just his capital that took a hit, it was his ego. And the ego doesn't lose gracefully. It rationalizes, it defends, It blames. It looks for reasons outside itself, market makers, manipulation algorithms, anything but its own attachment to being right. He closed the position angry and confused. But beneath that anger was something deeper: disbelief. That moment when your mind can't accept the truth it's staring at. He told himself he'd get it back, maybe on the next trade, maybe with more size. That was the seed of revenge trading. Not revenge against the market, but against reality, against the feeling of powerlessness. Because in trading, nothing triggers us more than the reminder that we are not in control. And so he re-entered impulsively, emotionally desperate to prove something. The second trade failed too. By the end of the day, he had erased a week's worth of profit. But the loss wasn't measured in dollars. It was measured in identity. The market had cracked open a truth he wasn't ready to face. He didn't understand himself as deeply as he thought he did. That night, Daniel couldn't sleep. He replayed every decision, the charts, the logic, the numbers. He thought about volatility, theta decay probability. But what he really needed to understand wasn't in the option chain. It was in his own mind. Why do we crave certainty in a system built on chaos? Why do we chase the feeling of being right even when it costs us real money? And why does the market always seem to expose our deepest emotional weaknesses just when we think we've mastered it? The truth is, trading doesn't just reveal your strategy. It reveals yourself, your fears, your impulses, your hidden need to prove your worth. The charts are just mirrors. They show you what's already inside. For Daniel, that was the beginning of transformation, but he didn't know it yet. He thought it was just another bad day. He thought he had a trading problem. In reality, he had a psychology problem, because every losing trade is a symptom. And behind every symptom is a story, a belief, a bias, a moment where emotion overruled reason. Earnings didn't destroy his position. Expectation did. The belief that the market owed him a reward for being right. And that belief is what crushes more traders than volatility ever will. The next morning, Daniel didn't open his trading platform right away. He sat with his coffee staring at the reflection of his screen instead of the numbers on it. The red glow of yesterday's loss still lingered somewhere in his body, not just in his account. It was in his chest, his pulse, his breath. That's the strange thing about trading losses. They don't just disappear when you close the chart. They live in you. They echo. And if you're not careful, they start whispering. The whispers say things like, "You should have known better. You're smarter than that. You can make it back if you just stay focused." But those aren't thoughts. They're emotions disguised as logic. They come from the part of your brain that hates uncertainty, the part that equates control with safety. So Daniel did what many traders do. He opened the platform again. He started scrolling through charts, not to find opportunities, but to find closure. He wasn't looking for setups. He was looking for redemption. And redemption trading is the most dangerous kind of trading there is. Because when you trade for emotional balance, you no longer care about risk. You care about relief. You don't want profit, you want peace. But peace doesn't come from the next trade. It comes from the next realization. It took Daniel several losses to see that. Each one stripped away another layer of illusion. First went the illusion of control. He used to believe that more research meant more certainty. But markets don't reward effort. They reward alignment with probability. He realized that no matter how much he studied, he would never truly know. And that was both terrifying and freeing. Then went the illusion of understanding. He thought he understood volatility. He could calculate implied moves, compare IV rank estimate crush. But what he didn't understand was how his body would react when the screen turned red. No spreadsheet prepares you for the adrenaline spike of a collapsing premium. No chart warns you about the drop in serotonin when your brain screams you were right and it still didn't matter. That's when he saw the second layer, emotional anchoring. We anchor to our analysis, to our entry, to our beliefs about what should happen. And when the market refuses to agree, we suffer not because we lost money, but because reality disobeyed our expectations. That emotional gap between what is and what should be, that's the birthplace of all trading pain. He remembered reading about it once: cognitive dissonance, the discomfort of holding two truths. At once, I did everything right and I still lost. The mind doesn't know what to do with that. So it fights itself, it blames, denies, rationalizes anything to protect the ego from collapsing. Daniel started writing in a notebook, not about charts, but about feelings. He wrote, "I feel angry because I was right and still lost. I feel confused because I thought understanding the system meant I could predict it. I feel fear because I don't know how to detach." And that was the first time he traded differently, not on the market, but on his own thoughts. Because journaling is trading. You take a position on awareness. You enter at confusion hold through discomfort and exit with clarity. The more he wrote, the more he realized that every trade had two prices: the market price and the emotional price. One was visible, the other was hidden until it was paid. He began to see that his need to be right came from something much deeper than trading. It came from his upbringing, his identity, his fear of failure. In his world, being wrong wasn't just an event, it was a statement about who he was. And that belief turned every trade into a verdict on his self-worth. That's why losses hurt so much. Not because of money, but because of meaning. He wasn't losing dollars. He was losing identity. The market had exposed his subconscious equation: right, worthy, wrong, unworthy. And when you link your worth to your win rate, every drawdown becomes an existential crisis. Daniel saw that this was why so many traders blow up, not because they don't understand risk, but because they can't emotionally survive uncertainty. They chase control the way addicts chase a high. They crave the feeling of being right more than the discipline of being consistent. It's not greed. It's fear of being nothing without a win. That realization hit him harder than any loss. He closed his notebook and whispered, "I'm not trading the market. I'm trading myself." He took a deep breath and looked at the charts again. They looked different now, not as enemies, not as puzzles, but as mirrors. Each candle was a reflection of his own emotional state. Every spike of volatility mirrored his own fluctuations in confidence. He began to see patterns not in the market, but in his reactions. Whenever he felt euphoric, he over-leveraged. Whenever he felt regret, he overtraded. Whenever he felt fear, he froze and missed the setups he had prepared for. He realized he wasn't battling randomness. He was battling reactivity. The market was neutral. The charts were neutral. Only he was volatile. That's when he started to practice a different kind of edge emotional neutrality. He trained himself to pause before clicking the button, to feel the surge of adrenaline, the heartbeat, the tightness in the jaw, and simply observe it. Not suppress it, not fight it, just see it. Because awareness is the first hedge against impulse. He stopped asking, "What will the market do?" and started asking, "What will I do when it does it?" That question changed everything. Because trading isn't about prediction. It's about preparation for both price movement and emotional movement. The more he practiced this, the less reactive he became. Losses still hurt, but they didn't hijack him. Wins still felt good, but they didn't inflate him. He was learning the balance between detachment and discipline. And that's when the next illusion appeared, the illusion of progress. He started feeling proud of his awareness. He thought, "I've figured it out now. I understand my emotions." But awareness is not immunity. Understanding fear doesn't eliminate it. Recognizing greed doesn't erase it. You still have to face it every single trade. The market doesn't care about your self-awareness. It only cares about your execution. And so in his next earnings play, Daniel found himself once again at the edge of temptation. Different ticker, same setup, same rising IV, same excitement building under his skin. But this time he paused. He felt the urge to predict, to prove, to participate. He closed his eyes and whispered, "This is not a setup. This is a story my ego wants to tell." He didn't trade that event. He watched it instead. The stock jumped, IV crushed, options bled. And for the first time, Daniel felt something new cease. Not because he made money, but because he didn't need to. He had detached from the outcome. He had won the only game that mattered, the one inside his own head. Weeks passed. Daniel's trading journal grew thicker, not from trades, but from thoughts. Every page became less about the market and more about him. Patterns began to emerge, not in price action, but in emotion. He realized that every impulsive trade had a fingerprint, a tone, a rhythm, a feeling that arrived long before the mouse click. It was never about data. It was about state. He could trace every mistake back to a specific emotion that he refused to acknowledge in time. The moment he felt a rush of certainty, the trade would fail. The moment he felt a desperate need to make back losses, the chart would punish him. And the moments when he felt calm, detached, humble, those were the moments when the market aligned with him. He began to see a truth few traders ever reach. The market doesn't respond to knowledge. It responds to psychological alignment. That realization changed the way he saw everything, entries, exits, even life outside the screen. He stopped chasing trades and started listening. He listened to his heartbeat before placing an order. He listened to the small tremor in his voice when he talked about potential setups. He noticed how his breathing changed when he was watching open P&L fluctuate. Every physical signal was data, not market data, but mind data, because the body speaks before the brain translates. And trading, he realized, wasn't a battle of strategy. It was a conversation between emotion and awareness. That's when he understood something profound. Mastery in trading isn't the absence of emotion. It's the mastery of emotional interpretation. He couldn't stop fear from arising. He couldn't erase greed, but he could learn to recognize them without obeying them. That's the shift from being a trader to becoming an observer. Most traders live inside their thoughts. They react to every candle as if it's personal. They feel excitement when price moves their way, anger when it doesn't, panic when it reverses. They forget that the market doesn't know they exist, but the observer sees differently. The observer watches the same chart, same price, same data, but feels no compulsion to act. He moves only when the signal and the state align. He knows that no setup is complete without emotional neutrality. For Daniel, that became the new edge, not a technical indicator, but an internal one. He called it emotional volatility index. If his mind was noisy, he didn't trade. If he was tired, he didn't trade. If he was chasing, he stopped. Because discipline isn't built by adding rules. It's built by subtracting illusions. He learned to accept uncertainty as a constant companion. Instead of resisting it, he invited it in. He understood that the mind craves prediction because it fears chaos, but chaos is the market's native language. So he learned to listen, not control. Acceptance became his strategy. Detachment became his profit. He wrote in his journal one line that would stay with him forever. The goal is not to predict movement, but to remain unmoved. It was strange at first, this peace. He used to associate peace with boredom. Now he saw it as power, because when the mind is still, decisions become clear. When emotions settle, probabilities speak louder. He stopped comparing himself to other traders. He stopped watching social media trades. He stopped chasing streaks. He understood that everyone trades their own psychology even when they think they're trading the same ticker. One day he received a message from a friend, another trader, who was frustrated about losing after being right on earnings. Daniel smiled. He saw his old self in those words. The confusion, the anger, the disbelief. He wrote back, "You didn't lose because of the trade. You lost because you needed to be right." That single sentence carried the weight of months of reflection because he had lived it. And through that experience, he had learned the quietest truth of all, that success in trading is not measured in profit, but in presence. Presence to see your own mind. Presence to act without attachment. Presence to watch loss without resistance. He began to teach himself mindfulness between trades, not to escape emotion, but to anchor awareness. He would sit in silence for 10 minutes before the market opened, breathing slowly, watching the thoughts appear and disappear like passing clouds. He noticed how each thought carried a different emotional tone: excitement, fear, impatience. And he learned that none of them were him. They were just weather patterns passing through consciousness. When he opened the charts after meditation, the same data felt different. The noise was quieter. The market's rhythm felt slower. He could see setups with clarity, not urgency. He realized that trading is a mirror of consciousness. Whatever you resist inside yourself will appear on the chart as volatility. Whatever you accept inside yourself will appear as flow. From that moment, trading stopped being about money. It became a practice, a meditation on uncertainty. Each trade was an opportunity to observe, not to prove. Each win was a reminder of humility. Each loss a teacher of surrender. He began to see IV crush differently too. It was no longer an enemy. It was a metaphor. The same way implied volatility collapses after the truth is revealed, illusions collapse after awareness arrives. Expectation deflates, reality normalizes, and peace returns. IV crush wasn't just a market event, it was a psychological one. It symbolized the crash of inflated belief, the correction of emotional premium. He smiled at the thought. He had lived through his own IV crush, the implosion of ego, the recalibration of mind. And like the market after earnings, he was finally pricing himself correctly. He realized that true freedom as a trader comes when you no longer need to win, when you can sit in front of the screen, feel the urge to act, and simply not act. That's mastery. That's emotional liquidity, the ability to let thoughts flow without getting stuck. Over time, Daniel's results improved. But that wasn't the real victory. The victory was internal. He no longer flinched when the market moved against him. He no longer celebrated recklessly when he won. His equity curve began to look like his mental state: steady, patient, composed. He wrote again in his journal, "Profits are the side effect of inner balance." And it was true, because once the mind is still, execution becomes art. You stop reacting, you start responding, you stop fighting the market, you start dancing with it. That's when he finally understood what trading really is: not a path to wealth, but a path to awareness. Each candle a lesson in impermanence, each loss a reminder of humility, each win an invitation to gratitude. The market had been his greatest teacher all along, not in finance, but in psychology and patience and surrender. He thought back to that first night after the IV crush when he felt lost and angry and broken. Now he smiled softly at the memory, because that pain was the doorway. The breakdown had been the breakthrough. And maybe that's the hidden truth inside every trade, that the losses we fear most are often the lessons we need most. He closed his journal and whispered almost as a mantra, "I no longer trade to be right. I trade to be real." Time passed quietly. Markets moved as they always had, waves of optimism, tides of fear. News cycles changed. Tickers, rotated volatility expanded and contracted. But Daniel was no longer chasing the rhythm. He was part of it. He woke early, brewed coffee, and sat in silence before the screens lit up. The numbers no longer shouted. They spoke. Each flicker of price felt like breath. Inhale, exhale, movement, stillness. He realized that the market never changed. Only he did. He used to believe trading was a war, him versus randomness, intellect versus chaos. Now he saw it as a mirror held to human consciousness. The same greed that drove bubbles lived inside him. The same fear that caused crashes whispered in his chest. The same uncertainty that made charts unpredictable shaped every decision he made. Trading had never been about predicting price. It was about understanding response. Price moves, emotion follows, awareness observes. And the distance between emotion and awareness, that's where discipline lives. He remembered how the journey began, the excitement of an earnings play, the sting of IV crush, the confusion of being right yet losing. That paradox had once broken him. Now it guided him. Because every IV crush carries a spiritual metaphor, the collapse of inflated expectation. When the truth is revealed, premium disappears, and so does illusion. The market resets to fair value. The mind resets to truth. Painful, but pure. Daniel smiled at that symmetry. He realized that losses are not punishments. They are recalibrations. They return you to equilibrium, to humility, to presence. He thought about overconfidence, how it had once felt like strength. Now he saw it as armor built from fear. Confidence without awareness is just denial dressed in certainty. Real strength is quiet. It doesn't need to predict. It adapts. It doesn't seek control. It accepts variability. He had learned to measure progress not by account growth, but by recovery speed, how quickly he could return to neutrality after being wrong. The shorter the recovery, the stronger the mind. Because mastery isn't in the absence of reaction. It's in the speed of emotional recovery. He also began to notice something subtle, the same principles that guided trading guided life. In both, attachment creates suffering. In both, resistance magnifies pain. And in both, surrender reveals clarity. When he missed a setup, he breathed instead of cursing. When he won big, he thanked the randomness instead of worshiping his skill. He realized that humility is not weakness, it's alignment with reality. He began mentoring a few younger traders. They asked him for strategies, entries, Greeks, earnings plays. He gave them none. Instead, he told them stories about emotion, identity, and awareness. At first, they were disappointed. Then they began to listen differently. One of them asked, "So what's the ultimate edge?" Daniel smiled. The edge, he said, is the mind that can see clearly when everyone else is reacting. He explained that most traders lose not because of information, but because of interpretation. They see what they fear or what they desire, not what is. Charts are neutral until the ego touches them. Then they become distorted mirrors, reflecting attachment. He told them that every trade begins long before the order is placed. It begins the moment a thought attaches to emotion. If you can see that attachment forming, you can choose differently. If you can't, you'll repeat history. Silence followed. Then he said quietly, "Your real opponent is not volatility. It's the part of you that can't stay still when volatility rises." Those words stayed with them just as they had stayed with him. That night after the screens dimmed, Daniel walked outside. The city was quiet, the air still. He looked up at the sky, the same vast uncertainty he had once tried to conquer. Now he felt at home within it. He thought about the thousands of traders still fighting, the same invisible battle he once fought, chasing confirmation, escaping fear, measuring worth in wins. He wished he could tell them what he had learned, that trading is not about money. It's about mastery of attention, and attention once mastered brings freedom far beyond the market. Because when you can remain calm amid uncertainty, you've already won the game, not the trading game, the human one. He whispered into the quiet night, I don't need to predict anymore. I just need to see clearly. The wind moved softly as if agreeing. He understood now that the goal was never perfection, but presence. Never certainty, but surrender. Never control, but connection. He opened his phone, scrolled through old journal entries, pages filled with frustration, confusion, anger. He didn't delete them. He smiled at them like old friends who had once tried to protect him. Every emotion had been a teacher, every mistake a message. The screen reflected his face, calm, older, aware. He whispered, "Thank you, market, for every loss that taught me who I was not, and every win that reminded me who I could be." He closed his eyes for a moment, and in that silence there was peace, the kind of peace that doesn't come from profit, but from understanding. He finally knew IV crush, regret, overconfidence. They were never enemies. They were chapters, and each chapter brought him closer to truth. He would trade again tomorrow, not to conquer, not to prove, but to participate, to witness the unfolding dance between chaos and awareness. He smiled softly. Another day, another chart, another lesson. The journey never ends, only the resistance does. And somewhere between randomness and reflection, between price and presence, between fear and acceptance, he found what every trader is really searching for: not certainty, not profit, but peace. The story ends where awareness begins. Markets will rise and fall, strategies will change, but your greatest edge will always be the space between stimulus and response, that brief moment where you choose awareness over impulse. Daniel's journey isn't unique, it's yours. It's every trader's reflection, the same hopes, the same fears, the same illusions crushed by the weight of reality. IV crush was never the enemy. It was the teacher. It showed that expectations are just emotions with a plan. And when those emotions collapse, truth is revealed. So the next time you sit before your charts, remember this. You are not trading the market. You are trading your reactions to it. Every click is a mirror. Every candle is a test of presence. And if you can remain calm in that chaos, if you can breathe while everyone else reacts, you've already won something greater than profit. You've found peace in uncertainty. This is Mind Over Markets. If this story resonated with you, share it. Let another trader know they're not alone in the silence after earnings. Because sometimes awareness spreads faster than any strategy ever could.